What's up, BCG Fam? So, I'm creating this video just to help you all with your entry and exit points. I know that that's the most popular question we get is when to get out the trade, when to get out the trade. And I'm creating this video just to assist you all with doing it by yourself, just so that you can gain the confidence you need to be able to get in trades by yourself, because you make the most profit on trades when you're trading it yourself, because you're reading the technicals, you're understanding what you're looking for, and you're understanding what it can do. So just having somebody tell you to get in and out of the trade, yes, that's nice, but not all of those trades are going to be correct. And this is one way to help you find the best trades for you. Like, you can find one stock that you want to trade and learn the patterns, learn the movements of this trade, and how the volume is working, and how people are investing in it, and that can help you out a lot with your profits. So this is why I'm creating this video. So today I'm just going to basically be teaching you all why I use TA, which is technical analysis. And the main reasons are because it helps you find your entry points, and it also helps you find your exit points. So that's the most important things, like when to get out, when to get in the trade, and when to get out of the trade. And then also it helps you predict the market. It helps you predict which way the stock is going to go. So you can, if you want to be able to trade this for a longer time, if you're looking at this TA and you say, okay, well, this is looking like it's about to start to trend upwards or in the bullish direction, then you know that you have time, that you can really be in this stock and be trading it through its ups and downs, because overall it's going up. And to do all of that, basically the first thing that we need to do is we need to create a watch list. Right? We need to create, or excuse me, not a watch list, but a checklist that helps you all determine if it's a good play or not. And I think I'm gonna the things that we go over in the Sunday session, those indicators, that's gonna help out a lot. We talk about them every Sunday. Ladarius speaks on them. If I'm looking at stocks, I'm speaking on those indicators as well. And those are what we're using to create our checklist and get it and determine if we should get into these trades or not. So let's just start off and take a look. In this video, it's already about 2 minutes in. It may be another 10 minutes. This could be a 30-minute or maybe an hour video. I honestly do not know how long it's going to take me to explain this. But just bear with me if it's a long video. I promise you, I think that it'll be worth it for you all. So the first thing I want to talk about, and one of the most important things, we're not going to talk about patterns a lot, but patterns are important as well. But the most important thing is going to be your support and resistance lines. And why this is the most important thing? Well, these support and resistance lines is going to help you create your entry points and your exit points. So it's going to tell you when to get in the trade, when to get out the trade. Target. So when you get into a trade, it's going to help you pick your target prices to where you should get out once you're in it, and it'll also help you create stop losses. So if you're in a trade and it actually starts to go the opposite direction, when you should just write the trade off completely. Because sometimes you may get in a trade and it tries to fake you out, but having a stop loss and having those support and resistance lines is going to help you make a better decision to say, okay, I feel comfortable. I did a good job just getting out of this play. I've been in trades before where I've gotten in, it started to go down, and I just couldn't let go. I just said, it's gonna go up. It's eventually gonna go up, and it never goes up. Well, at least it doesn't go up in the timely manner that I need it to go up, and I end up losing money. So this is just gonna help you with that. So let's talk about support and resistance. All right, so let's go ahead and draw some support lines. So when I'm drawing out support lines, I like to give myself two support lines. The first support line is basically just going to alert me just in my brain when I see it, or I can create an alert for it. That's going to give me an alert to say, hey, look at this chart. It's going down. You may be in a trade, or it may be about to bounce. You may be in the trade. It may be about to bounce back. Or it's going, and then also it'll tell me like, hey, look at this trade, because if you're in this trade and it's testing this level, if it gets any lower, it's going to get to your stop loss to go ahead and get out. And I like to tell people, we like to say the floor. Look at support as the floor of the stock. Another good example is to treat support as a trampoline. So pretend you're jumping on the trampoline. That support level that you're drawing, that's going to be the price to where you bounce off. That's going to be the area to where you're jumping on the trampoline and it's going to bounce you up. Okay, so if we was to draw a horizontal line, where would that first trampoline line be? Well, current price is at $68, so we know that it needs to be beneath that. We can draw a nice level of support here at about, say, 62, 63. We can draw it up. We can say here at about $64 will be our first level of support. It doesn't have to be perfect. Support lines are just reference points, and it just helps you get a better feel of what can potentially happen. So remember, we said we treat it as we pretended that it's a trampoline. So we can see that the stock price was going down. What happens when it touched this trampoline? Well, the price started to go up. It's bouncing off of that, treating it like a trampoline. Even back here, stock price went down, treated it as a trampoline, and we can draw it a little bit lower if we want, closer to the wick. Stock price went down, treated this area as a trampoline, bounced up, stock price went down. Even right here, treated it, jumped up, went down, treated it as a trampoline, started to jump up. Back here, we can see it's doing the same thing. Stock price went down, treated it as a trampoline, and then ultimately it broke beneath it. Now, it's not going to always treat it as a trampoline, as you can see here. Sometimes it may be a hole in that trampoline that causes you, when you jump, you go through that hole. Well, that's fine though, because you got to remember, if you go through a hole, it's going to be another trampoline beneath it to help you jump through, to help you start to bounce. So let's look at the next level. So let's draw our next level of support, because remember I say I like to have two levels of support, and let's draw the next one. So I'm going to wait really quickly. You can pause the video if you want to, and just see if you can determine where that next level of support will be. Okay, so if you chose down here, you're correct. So at about $50, $49, somewhere in that range, you're correct. And why did I choose this level as my support? Well, look, we got to look at prehistoric data when we're doing this TA. We can see stock price, when it broke beneath our first support, it came to this level, treated it as a trampoline, catapulted up back to the next support. Did it pull back down, tested this area again, jumped up off of it, pulled back down, tested it again, jumped off of it, pulled back down, got relatively close. Again, it's not going to always be perfect, but it jumped back above it, and it started to go up. So that's how you draw your support lines. And remember, your support line is always going to be beneath the price, the current price level. So the current price is at $68.74. You'll notice that those support lines are beneath that level. Now that we have our support, let's draw some resistance lines. So the resistance lines is typically the same thing, but it's just in the opposite direction. It's just going to be above the stock price levels. So, and remember, we can treat the resistance as our ceiling. So if we're jumping on a trampoline, instead of jumping on a trampoline outside, let's bring that trampoline to indoors. Okay, so if you're jumping on a trampoline indoors, you have restrictions, and that restriction is going to be your ceiling. So you can't jump as high as your ceiling. You're going to jump on your ceiling, and you're going to hit your head. The more that you hit that ceiling, eventually, yes, you'll be able to break above it, right? You'll break through the drywall and get to the next level, ideally. But you will have that restraint at the very beginning. So we'll need to draw that restraint out, and these restraints are going to help us create target prices. So, and I'll show you how we'll talk about those target prices. So my first constraint, my first resistance level, I'm going to draw the same concept. You need to see 3 touches. It's going to be right here. Why did I choose this level? Well, we can see stock price started to go up. It tested this level here, and it rejected it. Right, and when it rejected, eventually it broke above it. But at first, it was testing it at the bottom. And if we go back here, we can see stock price was coming down, ups and downs. It's testing this level, it's rejecting it. Went down, came up, rejected it, went down, came up, tested this level, and then eventually it broke above it. Back here, we can see it was going up. It started to have some weird activity here. So that's another good, strong place that we can say our resistance can be. So that's going to be our first level of resistance. Now, where's our next level? Remember, we want to have 2 levels of resistance. So first level is at $79, $80. Where can we draw our next resistance? So we can draw our next resistance, and we have a lot of activity right here at about $88. So at about $88, we can say that's some nice activity. We can see it was treating this as support. So that's a nice level. Remember that support and resistance lines are interchangeable. So what was once a support line can be a resistance line, and what once was a resistance line can be a support level. So I like to tell, so if we keep drawing that parallel between the trampoline and the ceiling, just think that when you're jumping on this trampoline, let's just pretend like the entire floor of your house is the trampoline. So if you're jumping on that trampoline and you're hitting that ceiling, well, when you break above to the second story, that floor is going to be a trampoline as well. So when you break above that ceiling and you start to bounce on that next floor, that's going to be the new support level. And if you fall down, then you can see how that second story now becomes that resistance level, because it's now on the ceiling for that story. So just try to look at it like that. I'm not sure if that's going to help everybody draw a parallel between the two, but I like to use that example. That seems to come home for everybody, or touch base with everybody, because it's something that you see every day. Okay, so now that we have our two support, we have our two resistance lines, you still haven't showed me how to get in a trade, or when to get into a trade. Well, what you want to do is you want to use that first resistance line to say, hey, if the stock price breaks above this level and can hold, we have a nice size candlestick that gets above it, then we'll say, okay, we'll get into that trade, and our target price will be this resistance level. So if we can get above, so we can break through the ceiling, get above that first resistance and start to jump on the trampoline on that second story, I'm going to use the second story ceiling, my resistance, as my target price. So when I'm bouncing on that trampoline, when I hit my head on that ceiling, I'm going to go ahead and get out. That's telling me, okay, let me get out. I couldn't break through it. Now, sometimes you may have a stock that it breaks through this ceiling, and then you get in and it breaks above that ceiling really hard, like right off the first try. Then you'll have to use other indicators to see, okay, should I get in, or should I stay in this trade or not? And sometimes you may have it to where the stock price breaks above this ceiling, and you'll see that, okay, well, it's not that profitable for me to get into the trade because it broke past the ceiling and is at $87. So should I still get in and take that $1 profit? You can, or you can just wait to see if it's going to break above that ceiling as well and try to find another target price. Hope that makes sense. If it doesn't, just leave a comment and I'll try to further explain that. But that's how we have our target prices. So we know our entry point would be once we have a nice size candlestick that falls in between this range, and we know our target price is going to be this $87, $88 range. Now, we talked about entry points. Let's just say we get into this trade. Well, when should I get out this trade? That's going to be determined off of a few things. It's going to be determined off your risk level, how much you're willing to lose, how long you want to hold it, these things of this nature. And we could draw another support line right here just to have a safe way. So for me, if I get into this trade here, and we'll clear out, let's clear out this support line just to keep it. And I'm gonna change my support lines to blue, just so that we know that those are support lines. Okay. So let's just say we get into this trade. Once it breaks above it and we get into this trade. So I always like to have a stop loss. My stop loss will be here at this very bottom, because I know if it breaks beneath this, it's going to continue to go even lower, right? It's going to go to this third support line we have. So if we was to get into this trade, this first support line is going to be where I alert myself to say, hey, we're getting close to our stop loss. We know our stop. If it breaks beneath this support level and it breaks beneath this support level, we need to go ahead and get out. So this second support line that I have here at 61 will be the time where I'm getting out this trade. All right, whatever. If I'm taking the loss, I'm fine with taking that loss and getting out. I want a nice size candlestick to break beneath this and hold, or I want to see a nice size candlestick before it breaks beneath it, so that I can feel comfortable to say, okay, yeah, let me go ahead and get out, and this isn't going to fake me out. And of course, use those other indicators we'll talk about in the throughout this video, just to help you form a better decision on if you should get in or get out. Okay, so now we have that. We have our support lines. We have our support and resistance lines. So that's the first thing on our checklist. We want to make sure we have checked off. Again, these two things are the most important things to have, just because that's going to help you define when to get out, when to get in this trade, and your target prices. The next thing we want to look at is the RSI level. If we're swing trading and we just stay on swing trading, we won't talk options. We won't think about it in the option standpoint. But the same things fall into it if you're doing options as well. If you're doing options, just do call options. You're looking at it in a call option standpoint. But if we're swing trading, we want to find the best place to get in, just so that we can make sure we're going to make money and it's not going to pull back on us. We're not focused. Well, I won't even get into time to kick because that's options. But yeah, that's what we want to look at. So the first thing we'll look at is RSI level. The RSI level is going to tell us how much momentum this stock has. Is it trending? Which way is it trending? Do we have more? Are we seeing buying volume, or are we seeing selling volume? That's going to help us with this. So if we're doing bullish, sweet spot is 45 to 55 point upwards. So we want to make sure before we get into a trade that our RSI level is in that 45 to 55 range, pointing upwards. Okay, so that's the next thing. So we have support, resistance. The next thing we want to look at is our RSI level. So if those two things check off, we'll get into this trade. So notice, if you say, okay, is this a good time to get into this trade? We're at 39. It's flattening out. It's not pointing upwards just yet, but we're at 39. So I would tell you, you can get in, but I would wait. I would feel more comfortable if it's pointing upwards in that 45 to 55 range. So I would just wait. I would tell you just to wait a little bit. It's okay to be patient. It's okay to leave some money on the table just so that you can confirm that it is going up. I promise you, I'd rather make 15% than 20% and have it safer, just because I don't have to worry about the stress of it potentially pulling back on me or doing something that I don't want it to do. But to be able to confirm that which way it's going to go and still make a nice size percentage of like 15% is pretty good for me. I'm okay with that. All right, so we have support, RSI. The next thing that I'll tell you to look at is look at your stochastic RSI. Where's that stochastic RSI at? Well, if that stochastic is all the way up here and this looks like it's coming down, pointing downwards, I wouldn't necessarily tell you to get into that trade, because we have downwards pressure. All right, so I will be waiting for that. I would like to see my stochastic RSI, the blue line, pointing upwards, and it's above this dash at the bottom at 20. So it's above the 20 range. That's where I like to see it. I like to see it above 20 and it's trying to head to 50. That's a nice little gesture. So we can see it's at about 10. So we still have time on that. So if I'm making my checklist, the only thing right now that's checking off for me is going to be my support and resistance. And support and resistance is only checking off because we drew them, right? It hasn't necessarily did what we did. So support isn't even checking, or resistance isn't even checking off yet, because it hasn't broken above my resistance. So far nothing has checked off. We can talk about moving averages. Moving averages, treat them as support and resistance lines. Anytime the stock, moving averages has 2 points. It'll show you which way the stock is trending. So right now we see these moving averages are pointing downwards. They're coming down. So that's telling us that the stock price has been trending downwards. Anytime the moving averages are pointing upwards, then that's going to indicate that the stock price is moving in the upwards direction. These are also good to use as reference points for support and resistance lines. Anytime the stock prices, and now we'll have to, can I hide these? I'm sorry. But then can I get it back? Okay. Well, I can just delete them at that point and then just back them up. Anytime the support and resistance lines, anytime the stock price is beneath the moving averages, treat it as resistance. So we're treating this 200-day as a resistance. And what's nice about this is, if we just, you'll notice that my resistance line is lining up with my 200-day moving average. You saw when I was charting this line wasn't here, the moving average wasn't here, so it's treating it as resistance. You want to always treat these things as support or resistance. So because the stock price is beneath it, it's resistance. If the stock price was above it, it would be support. But you treat each one of those lines like that. You're going to treat that 200, that 20-day, 20-week, 50-week, 100-week, 200-week. You're going to treat all of those the same, right, as either support or resistance. It helps you out a lot. And then also, depending on if the moving average is pointing downwards, it's going to help you indicate which way the stock price has been trending. So because this 20-week moving average has been pointing downwards, we can see stock price has been decreasing since it's been doing that. So that's a good indication to let you know stock price is going to decrease or increase. So that's another thing I have. So you want to always check those just to make sure that you're not getting close to it. Because again, let's say we got into this trade here at the bottom at 62, and we didn't look at our moving average. We say, okay, this is going to probably trend back up to 130. Well, before it gets there, we know we're going to have a hiccup at these moving averages, and we're going to have a few hiccups. We'll see we're going to have a hiccup at 200. You're going to have these hiccups at this 50 and 100 day, and also that 20 day. So you're going to always have hiccups on those levels, and that's just historical data. We can see anytime, even if we go back, we can see when it gets to these levels, if it treats them, it tries to catapult. It treated this 50 week as a trampoline, shot up, treated the 20 day as resistance, pulled back down, broke beneath that one. And then when it started to come up, treated this moving average as resistance, pulled back, tested. So you can see. So always just make sure you're checking those, because that'll let you know, well, hey, if this is going to go up, I know that it's going to go to that 200 day. And let me know if you have questions about that. And then, and remember, this checklist is just really beginner friendly. These checklists, you can add indicators to it. Just make sure when you're adding indicators, you actually are using them for your checklist. You're not just adding them, and then when you're going into a play, you're not checking it off to make sure that it's pointing in the correct direction that you want it to. So then, let's always look at the MACD. So I won't make it too confusing, but you always want to check the MACD, see which way. If that buying pressure, because we're doing bullish plays, we're doing uptrends, you want to see that blue line starting to point upwards and trying to cross over the red line. If the blue line is beneath the red line, be careful with it, because that's indicating that the stock price is decreasing in value. You want to at least see it get close to the blue line, to the red line, and start to want to cross above it. So anytime you see the blue line above the red line, that's helping you make a decision to say, okay, I have this blue line above my red line. They have separation, and the blue line is still pointing upwards. This stock is probably going to continue to go up in value. All right. So looking at all these things, we can see that at this current moment, the stock, I wouldn't get into this trade right now because it hasn't checked off anything on my list. RSI isn't in a good level. My stochastic, it still has room. It still needs to go up some more. RSI still needs to go up a little more. And we have a crossover to where the buying pressure is beneath the selling pressure. And then we're also testing the 200 day, which is my resistance. So remember the entry point. My entry point is basically is when we have a nice size candlestick break above my resistance. This first level of resistance we have here, that's when we're going to make that candlestick. Once it breaks above that level, target price is $88, $90 is going to be the target price that I'm looking at. So let's play it a little bit to see what happens. Hit forward. Okay, we can see it's creating it. It's testing support. We're having that green candlestick. Let's get into it. You can see. Look what happens when it tests 200. So we have a nice size candlestick. It closed just above 200. But what happens the next day? It starts off red. It's trying to treat it as resistance. So it wants to break above it. Trampoline had a nice catapult up. It wants to treat it as resistance, or it wants to break above resistance. I wouldn't just get in just yet. I would want to still see a green candlestick close above that 100 day. This is a nice size candlestick to start us off that closed above it, but that next candlestick is going to be confirmation for me to get in. We can see it started off red, started to pull back, and ultimately, boom, broke above it. Now, it broke above this level. This candlestick for this week is when I'm looking, and this is on the weekly. So these candlesticks is 1 week of trading. So this candlestick right here is when I'm saying, telling myself, okay, let me get into a trade. From here, what you would do is you will switch to your daily, and you can just use. And then why do I say, okay, this is a good spot to get in? I'm sorry, I'm moving a little bit too fast. Well, let's look at our indicators. So remember, this is the checklist. Support rule, support. The first thing we wanted to see, support and resistance, we wanted to see stock price break above our resistance level and close. It did that. So we can check that off. RSI level. RSI level, we want to see it at 45.55 pointing upwards. Where's the RSI level? It's at 44.72. It doesn't have to be exactly 45.55. Use your discretion. It's really close to that sweet spot, and it's pointing upwards. Check off my checklist. RSI, the stochastic RSI level. My stochastic RSI level, I want it to be pointing upwards, trying to get back to that 100 range. So we can see it was coming from 0. It's pointing upwards. It got past 50. It's at 60, pointing upwards. We know it has 40 more values to go to get to 100. So that has momentum to get to 100. That's going to check off as well. Moving averages. Remember we said those moving averages, we want to look at those moving averages to see two things. We want to see which way is which direction is potentially going overall, and then also treat it as support and resistance lines, because we know how the stocks like to react. It treated the 200-day as support. It broke up, as resistance. It broke above it. Now it's treating it as support, and we can confirm that with this green candlestick. So where is it going to go to next? Our target price, which is this $80 range we have, which is also the 20-day support. We can see here that this is going to be that this is going to be that 20-day moving average, 20-week moving average. Excuse me. So we will treat that as resistance. So we were saying, okay, we get in here at $80.33. We're going to be getting out somewhere at $88, $89 is where we're going to go ahead and get out of this play. So that checks off as well. We're moving to another support level. So we know that we're going to hit a hiccup, but our hiccup is also our target price, which is fine. And then lastly, we're going to check our MACD. So our MACD, remember what we said, we want to see that blue line crossing above our red line, or we want to see it getting really close to crossing above. So we have our buying pressure. Yes, it's beneath it, which is fine, but we have a potential crossover to the upside. And that potential crossover to the upside can be the bottom that we need to give us the confirmation to say, hey, let me get into that trade. So I just checked off everything on that checklist to say, hey, let me get into that trade. This is a good trade. I feel confident getting into this trade. So you will get into this trade and you can ride it up to this $88 range, $89 range. And then you will go ahead and sell out and get profit. Again, it's not a lot of profit, but this is the safest way to make money, especially starting out. So if we just play it a little bit, you can see stock price got relatively close to it, and eventually on the next day it opened up above it. So again, you'll be in this. This is extra money that you received here. So our target price was $88. It got really close to it. It closed. We kept it for a day because of the momentum that we saw was happening. It got above it. You just made extra money. You can get in. You can get out at this point. You can stay in if you want to. I always tell people, go ahead, cut the cord. Look for another time to get in. Look for another setup, because this could come crashing down really quickly. But you do that at your discretion. You can use those indicators to tell yourself, hey, do you want to stay in this trade? RSI level is still looking nice. It's at 49. Stochastic RSI is still looking nice. It's at 80. We broke above those moving averages. The next place I can see it getting to is going to be this 50-day moving average, which is at almost $100. And then also, we just had that crossover on the MACD to the upside. So this is showing out to be, hey, you may want to stay in this. You may make some extra money on it. But again, because I like to be safer than sorry. If I didn't hit my percentage of 15%, I'm out the trade. I'll look for it to pull back a little bit and find another spot to jump in. That's just me. Some people will stay in. Some people will say, hey, stay in. And you're absolutely okay with staying in here. I don't see, again, the indicators aren't telling me that it's about to pull back. But just for me personally, I like to go ahead and get out and then find another spot to get in. If we play it a little bit, we can see that's still a green candlestick. We can see it's playing with that 50 week moving average, trying to treat it as resistance, as our ceiling. And it's doing that. Testing it again. You can see it's pulling back. See, at this point, it's doing those things. It's fighting these two lines. Again, if you're looking at it, stochastic is really high. It can stay above that 100 range. We still have a nice spot for the RSIs pointing up at 51. Have that crossover. So you could stay in here if you wanted to. Again, me personally, I'm not in this trade anymore. I'm looking for my next spot to get in. But it's getting to the point for me to say, hey, you might want to get out, which it could continue to rise up even more. We can see here, it catapulted off of that level, and now it's treating it as it's treating our moving average right here, the 50, as our trampoline. And now if we was to find our next ceiling, we can say 1111 will be the next ceiling. So the next place that we'll see a rejection is here. Now, once it hits 1110, definitely get out. Even if it's going to continue to go up. Hits 1110, catapult off. I'm telling people, me personally, I'm saying, hey, this is probably going to get hot. It's probably is revving up. That stochastic is really high. It's really risky at this point. It can continue to go up. Maybe get to 130, but at this point, 58 RSI level, that stochastic is high. My checklist is starting to lose value, right? So I just want to be safer than sorry. Yes, I may leave some money on the table, but that's fine for me. See, it gets higher. Yeah, it gets higher. Now it's starting to flatten out. So now we can see it hit 130, and now it's starting to flatten out. RSI level. So looking at this, we can draw another trampoline. We can draw it at about 130. So looking at this, at this point, we didn't start it off. We didn't start it off here at $80. Is all the way up to 120. I would say you should definitely just get out. Like you won it, right? You've done what you came. You saw. You see. You conquered. Go ahead and get out, because at this point it's probably going to be coming down. If we start to just reverse our checklist again one more time, if we look at that RSI level, 60, so it's outside of that sweet spot of 45, 55, a little bit, 5 points, but it's pointing downwards. And that stochastic RSI is really high. So it's not, the stochastic is not where we want to get in for a bullish trade, because it doesn't have room. It needs to cool down. And then we were testing our ceiling. So we know our ceiling, we rejected that ceiling. We're coming back down to the trampoline. So we don't want to come all the way back down to 111. And we're losing our profit that we have here at 123. So I would just say, hey, just get out, find another trade, because this could continue to go down, and if it goes down, it's going to test that trampoline. And we can see it slowly reaching that trampoline that we see here. Now at this point, I should have got out at 123, but I stood in. Do you think it's going to come back up to 128? Well, let's check the indicators. RSI level pointing downwards. It's at 55, which is within our sweet spot, but it is pointing downwards. Stochastic RSI is really high. It's coming down. We know when it hits 100, it's going to come and try to test 0, excuse me. So we know that this is going to start to come down. It's pointing downwards. It's coming down. We're testing the trampoline, so we could see that this bounces up. That is the one plus side. But however, we can see that really our next trampoline spot may be these moving averages that we have here at $98. And then we're really close to a MACD crossover to the downside, to where the blue line is beneath the red line. And then that's going to cause this stock price to get out. So at this point, I'm saying, hey, if you didn't get out at 123, you should definitely be getting out now. This is not an option. Get out and wait for it to do whatever it's gonna do. All right. So I hope that makes sense. If it doesn't, and we can see it started to go down. Yeah, and see, and now it's going down, and now we're here to where it currently is at. So right now, if you're looking to say, hey, when should I start to set up to get into this trade? Well, I'm waiting for it to cool down some more. Next cool down place is going to be these moving averages. My next trampoline is going to be at $99, these trampoline areas. So if you have any questions, please feel free to put them in the Discord and I will answer them for you. I appreciate y'all. Thank you.